Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your agriculture update for this Monday, and this is the 24th of April, 2017, and the time about 1:35 p.m. Central Daylight Time. A nice rally in soybeans, up 9.5 cents. Meal coming right on up strong today, up to the 320 level. Corn even up 1 3/4. But the wheat market, a lot of weakness, and frankly, cotton down, sugar down, and the soft commodities down. Now, you would have thought they'd have got a little bit better in the softs than they did with the dollar down 83 cents today, which is quite a bit in the index, and the euro up 150 points. And that's a sell-off. It was up 50 more points than this, so it was quite a bit of a rally. Energy markets under some pressure today as we continue to see rig counts build, and of course, people asking, OPEC almost is forced to continue the cuts unless if they pull out their support of the production cuts, do we go down to the $40 levels? That's the talk some people are talking about. So they expect that they're going to continue with it, but the market fighting two forces, increased U.S. production, of course, against the cutback in OPEC. As we look at the grain markets, and this is the May soybeans for the weekly chart, we'll go to the July for the dailies. You can see how the market came down to 929 3/4, and it's 30 cents off those lows. Now, we have bad weather, a lot of rain coming in, and some cool weather coming in now into the Midwest in the middle of the week and right through the weekend. There's already talk, how's that going to impact the corn plantings? Now, soybean plantings, they're only going to be about 2-3% done at this time of the year, but the corn could be 30%, and what will that rain, a lot of it do, will it force the farmers back into the fields to plant again. But in the soybeans, we're in a bit of an upthrust, about 22-cent rally, as you can see in the market from the low here. When we come to a July soybean daily bar chart, you can see all this price action on the sideline. I had pointed out, and I'll take today's action off the chart if I could, that was your high and your low. And all you did today is come back up to challenge that high area. Keep that in the back of your mind. In terms of what the chart was doing, one of the things that we had been doing is we had a triangle pattern coming down and one coming up. In other words, the market was coming in like that, and the market decided to break out of that to the upside. So now it's a question of the support line in the market, which means the swing line has got higher highs and higher lows. That's bullish. Prices are over the 18-day average of closes. That's bullish. To me, this means that the pros will buy pullbacks back to the 18-day average, but put in an order to bail out if the market takes out the last swing line low. And the reason for that is if you believe in the pattern of higher lows, higher highs, what would break it? Taking out 54.5. That's why. As we take a look at where the market might go to, I'm not all that enamored that it's going a lot higher because the upper Bollinger Band is just waiting for it here at 75 3/4. So if people are buyers at that 18-day average, my guess is, and the word is an educated guess, that is where the resistance is coming in, and momentum is already into the overbought area. So is there a trade setup? I'll leave that up to you. The way that I teach charting, no. Because you're overbought, what are you going to do? Buy into the upper Bollinger Band on the pullback even to the 59 level. I don't know that that'll be enough to get rid of the overbought condition. In the meal market, I'd be looking for a market to challenge the upper Bollinger Band. The market now has broken the pattern, and I'll show you this as we come in. Let's get rid of this and come back to Friday. Lower highs, lower lows, momentum still pointing down. The market today takes out 319. That means you've got a lower low and a higher high. Momentum is shifted to the upside, and bias is up because the market closed over the 18-day average of closes. The 321.50 zone is the upper Bollinger Band. Now, the soybean oil did get as high and through the 32.49 level. We got up to 32.55 today. You can see that right here. That was your upper Bollinger Band with the reversal down. The pattern is still one of higher lows and higher highs, and you pulled back to the 18-day average to get the feel, if you will, the benefit of neutrality. What do I call this line? The line in the sand. It's also a line where the market comes to often to figure out what to do next, that 18-day average of closes, and that's where you're at. In the corn market, on Friday, we hit the lower Bollinger Band, and bang, you have snapped away from that already, 4 cents. I would not be surprised to see the market challenge the 370 level again. The problem is it's oversold, and that makes selling it a bit difficult. In the wheat market, the trend is clearly to the downside, lower highs, lower lows. Now you have 3 days in a row where you've closed under the lower Bollinger Band. I'll put the odds of staying under it at 2% for the next day, and then 1% the day after if it doesn't close there. In other words, I'm looking for it to move over. But it does not, N-O-T, not have to get much of a rally. Just move to the right. Doesn't mean it's a buy by any stretch. In the sugar market, coming right down to the lower Bollinger Band for the support zone. The market is basically right now, and we can go through this together. Let's look at the high of this day. 1713. Then it comes down, comes back up to 1703, gets up to 1699, turns down here. There, it's quiet. This is Friday. And with today's break at 1617, I actually should take this arrow, put it here. We've got lower highs, lower lows, a very oversold condition, but nonetheless, still very much a bear market. In the coffee market, we now have 3 days in a row under the lower Bollinger Band. So you can see that you're getting quite a bit of this action right now in the slow stochastic area of being oversold, but in the lower Bollinger Band of 3 days under in that market. The cocoa market came up and failed on the rally. Now, it had lost intraday its embedded reading, got it right back because it closed near the lows of the day. Very bearish. Still has 1772 as the next support number. Cotton market made the highest high of the whole move today, and then from there, let go, closed lower on the day, overbought, outside day down, into the upper Bollinger Band. That's where the market should have failed. It did. I think the pros have taken their money off the table, and I think you have a neutral market there. Now, cattle was phenomenal at the end of the day. I know you wouldn't believe it, but if you get my twice daily reports, I pointed out that in cattle and feeder cattle, be careful. With that bearish report, you still have to understand the feedlots are very light. They can't find feeder cattle. And a feedlot stays in business by filling its pens up. I think they're aggressive buyers wherever they can find these animals. In the fat cattle, yeah, we're seeing a lot more placements, and that should be bearish the market, but there's a lot of demand for this cattle. And you got the higher high. Today's break low, well, at 114.42.5, we took out 85, but you kept the embedded reading. I'm going to say tomorrow is a very important day in this market. In the August feeder cattle, you did lose the embedded reading, but you didn't lose it just today. You were trying to lose it coming into today, and bingo, you can see how the market's coming down little bit by little bit here, and I find that fairly interesting. Let's see what it does tomorrow. All these markets, the live and the feeder, are staying over the 18-day average of closes, which is still keeps an upside bias. And finally, you had 3 days down in the hogs. I said that the odds of it staying down much more, just 2% of the time, you got to bounce. You have the embedded reading. I think the pros are waiting to sell this market and see if the market wants to give up that downside bias or not. Now, you heard me talk about my research, and if you haven't tried it, I'd like to give you 20 days access. That's a business month, basically. And I want you to see not only what I write, but my videos, my written recommendations. I'd like to give you my oral phone updates. Now, the oral phone updates only work in North America here. If you're outside of that, you can't get those, but you can get the written updates, and you can get what's so important, my morning subscriber video. Every morning at 8:30. I sit down at the computer and I give you trade idea upon trade idea. Day trade ideas, longer term ideas, ideas that I think that the pros are going to use in the market. They'll look just like that. Then I back that up with all the other written research that I have and the like. So you grab a cup of coffee. That's why I have the coffee cup there. You let me talk a bit. You can read about at night at 8 p.m. Central Daylight Time. I write another report, send it out. If I see an interesting play intraday besides everything else I've written about, I'll put out a special update. They look just like this. So you get a lot of research. Give yourself a free trial to it. It costs you nothing. 866-973-2077, www.iraepstein.com. And if you're watching me on YouTube, just click on this icon right here, and that will do what? It'll bring you right to the forum page. Choose that, and away you go. I'm Ira. You have a great day, and I will talk to you all tomorrow. Have a good one.